Now, let me jump you to an actual CBQ. And the first one, or the one that I decided to pick on here, is down in the revenue recognition and income measurement, the next to last module comprising the first unit. So let's take a look-see. So we'll do this as an opportunity for me to also walk you through one of these questions. First things first, what looks like the real thing? What's the Becker piece? Well, one of the things we feel strongly about is we want the course experience to closely mirror the exam experience. Now, I know when we first were kind of getting our course set up, the IMA got some weird questions because we were asking things like, what font do you use? And what colors do you use? And they're, honestly, the IMA said, why do you want to know? We said, well, when we build our software, we want it to look, feel exactly, or as close as we can get it to the real thing. So everything save for this little menu that I'm scrolling past is exactly how it should appear when you go to take your exam. So first thing you're going to always want to do on any CBQ, there's the case. So you click that, and in Prometric, you have widescreen monitors. Usually it's 21-inch, give or take. So this is how it's really designed to be seen. You can also increase the zoom here so you can read the facts. But what's nice is this allows you to keep the case open on your screen as you work through each question that's posed to you. And then here's what I recommend. I recommend going through the essay, right? Since all of the questions will probably deal with some facet or form, even if you don't necessarily absorb every little detail out of the case, reading it to understand what it's about, what it's focused on. Remember, there are only 2 cases. Despite, 6 areas of content, 2 cases. So they're likely to focus in on just specific elements, not the entirety of the exam. So the more you can understand, okay, I see where this one's driving. In this case, it's dealing with external financial reporting. So let's go through a little bit of the case, and then we'll see how this case-based question proposes to test your knowledge. So we have Volatry, I'm going to go with that, Technologies, and they say, yep, this is a high-end audio equipment retailer. And they say, yep, over the past quarter, they have been aggressively purchasing because they thought there was going to be a big surge in demand. Bad news, there wasn't. And so now they've got a lot of inventory sitting on their shelves. Some of it's been there a while too. Now it says one thing that they're worried about is figuring out what costs should be included in the valuation of their inventory. Now, quick side note here. Anytime from the perspective of the company, you hear almost an implied question, right? One area of concern is what costs should be included in the valuation of inventory. I read that as you're about to ask me what costs should be included in inventory. So sometimes they'll telegraph or at least indicate where they might be steering part of the question. And it says, yeah, the reason is there's a lot of cost to get the inventory. There's the purchase price. There's freight to get it to the warehouse. There's insurance as it's shipped to the warehouse. There's freight charges when they ship out their orders. They've even had to discount some of the existing inventory just to try to get it to sell. It also mentions they may have to increase sales commissions just to promote them, right? Maybe the salespeople are like, I just want to sell the new stuff. I don't want to sell this old stuff. So they say, well, you know what? Let's see if we can incentivize those salespeople. And then finally, it goes into some of the details of their inventory costing. And again, they say here, oh, here's FIFO, and they start giving me quantities and amounts, which to me tells me, yeah, they're going to make me calculate maybe cost of goods sold, maybe ending inventory. Usually once they start talking about it's a FIFO, it's LIFO method, and they start giving me some of the specific elements, that's what's helpful. Now remember, you do have scratch paper on the exam, so maybe as you're reading this, you'll find it more comfortable to actually making notes or putting down some highlights, whatever helps you to kind of keep things organized. With this kind of question, I would argue the most important thing is to keep your thoughts organized as you respond to each part of the question. And bear in mind, you don't have to do them in order. So if you look at one part and go, ooh, I'm really not sure about that, just go on to the next part. Go and get the points as efficiently as you can. Okay, so now I'm going to walk through the answer, but I also want you to see the different ways that they can structure a question like this. So this time it says, use your mouse to drag and drops. This is a drag and drop style to the appropriate category for each of the items related to the inventory process below. Well, no surprise, right? They hinted that that was what we were going to get somewhere in this question. Based on whether it should be included or excluded from laundry's ending inventory under US GAAP. And then it's nice to say all options will be used. So it's saying, no, there's no trick question here. Every one of these goes somewhere. Sometimes by necessity, they'll put little tips or kind of limitations or descriptive items in the question. Don't just bypass those. They may be helpful as you answer the question. So all they want us to do here is it's the world's goofiest multiple choice because it doesn't even have A, B, C, and D. It's got A and B. It says what gets included and what gets excluded. And I'm going to turn down, I know I wanted to make sure that you could all see this as clearly as possible, but I'm going to turn down the zoom just a little bit here because I want it to look as close to as it would look on the screen. It's not to me as important that it's easily visible as it is, I want you to see kind of the mechanism. So, general rule of thumb for inventory. Anything you pay to get it to where you can sell it is part of the cost of the inventory. Anything you incur because you sold it is a selling expense. It's not part of the cost of the inventory. In other words, it shouldn't end up in cost of goods sold because it's not part of the cost of the goods you sold. It's part of selling expenses. So, I think of what would be from beginning to I've got it on my shelf ready to sell? Well, I would say I would include the purchase price that I paid. That would certainly be included. To get it on my shelf, I've got to pay for freight. I've got to pay for whatever shipping cost to get it there. And if I'm going to pay for insurance while it's in transit, again, that's a cost I'm willing to bear to get it to its point where it can be sold. Now, after that, if I incur charges. So if I say, right, if I'm the retailer that says, hey, free shipping if you buy at least so much, well, then that freight charge is a selling expense. If I give my salespeople greater commissions, that's a selling expense. That's not part of the cost. Nor is offering a discount. If it's a discount, that is me incentivizing selling the items. It has nothing to do with its original cost. Now, with each of these, you have a couple of options. One is you could go through the entire question start to finish to see how you did. But if you were more interested in saying, I'm trying to learn, I want to look at each part as I complete it, you can then hit submit and it will show you which parts you got correct or which parts you got incorrect, and it will provide you with an explanation. Now, you might have noticed in a couple of spots, there's this little, flower? We'll go with that. I'm sure there's marketing folks right now screaming at me saying that's not what it is. But more importantly to me is the name, newt, because a lot of folks are like, what, like the lizard or amphibian? No. There's a guy named Newt Becker. He actually founded the company now it will be 70 years next year. But Newt's our AI virtual assistant. So it gives you a couple of suggested prompts. So if you say, wow, I really wasn't sure about this one, you could say, give it to me in simple terms. And it will give you a more detailed explanation and try to help clarify. But you can ask Newt anything. So if you wanted to say, what's a freight charge? Of course, that presumes I can spell. And it will do its level best based on its knowledge base to explain that. And here it even goes into explaining, well, here's what the difference is between freight in and freight out. So this is meant to be a line of defense. A lot of what Becker tries its darndest to do is provide layered defense. First, we give you the explanation. That may be enough for you to go, oh, I get it now. If it isn't, we have Newt that you can pose additional questions while you're working or after you've kind of graded the question. We also have our academic support feature, so you can send a question into our academic support team to get an asynchronous response. So we try to provide a number of layers for you to help resolve any questions you might have. Okay. Well, let's go on to the next one. So here's another example. So we've seen now drag and drop. Next one is drop down menu. So it is a computational question, kind of, in terms of it gives you a list of choices. So this one says the value of ending inventory for all the newer model soundbars should be recorded as what? And we have three discrete options: 18,000, 21,600, 22,500. So how would we come up with this one? Again, the explanation will give you the detailed walkthrough, but I'll give you the short version. In this case, there's the old, one of the things that they're dealing with is they have this old inventory. That's the old model. And apparently no one really wants to buy the old model. The salespeople don't want to sell the old model. So it's just been sitting there. This is only talking about the new models. So what you'll notice here, if we kind of look over on the left side, is it says, well, we bought 100 models, 100 of them in January at $200 each, 120 in February at $240, and then 150 in March at $250. It's FIFO. So what's in ending inventory? The March stuff first. And we can even look at it and say, well, if they bought 100 and 120 and 150, that's 370 units. And it says 280 were sold. So there's 90 left. So basically, when you assume FIFO, the last thing you bought is what's left in inventory. So it's just 90 sound bars at 250 each. What's 90 times 250? Well, it happens to be 22,500. One of the nice things is that once you have ending inventory, it is really easy to figure out cost of goods sold. In fact, as long as you solve for one, you have the other, which means whichever one you think is faster, you can absolutely do that one first. In this case, what is the cost of goods available for sale, right? At the end of the day, here's one of the most important formulas I've ever found for dealing with inventory. Beginning inventory plus purchases is what I could sell. Cost of goods available for sale. I can do two things with it. I could sell it or it's still on my shelf. It's either cost of goods sold or it's ending inventory. In this case, the cost of goods available for sale is $86,300. That's the total amount that was purchased. If $22,500 is left in my ending inventory, that means $63,800 is what was left in cost of goods sold. And again, the explanation will walk you through how those are computed and where it's relevant. If we find it's not just what you get right, but why you might have picked the wrong answer, it will try to provide feedback as to where those wrong answers may have come from. We do that, definitely do that on the multiple choice. Sometimes you'll get a calculation and an open-ended response. So this one says, well, what's the proper inventory value for the 25 older sound bars that were purchased 10 months ago? Now, at first blush, you go, well, it says here that they bought 25 sound bars at $160. So you might be thinking, and by the way, yes, there are certain models of calculator that the IMA allows you to have and bring with you to the testing center. There is a built-in calculator. You're welcome to use it. In fact, one of the things that I recommend is that you get comfortable and try them both. So you know on exam day, would you be happier using the built-in calculator? Or I don't know about you, when I did the CMA exam, I was like, I want my own calculator. I don't want to have to be messing with that on the screen. But what you'd find is that you'd say, well, wait a minute. If it was $160 for 25, is there a trick question here? Isn't that just 4,000? No, it's not. Why? Well, because inventory is not at just straight cost if the inventory has declined in value. We now record it under US GAAP. Generally, and certainly under FIFO, it's what's called, used to be just lower of cost or market. Now, to be more precise, it's the lower of cost or net realizable value. So although the basis, the cost is 160, that's not what matters. What matters is the very last sentence, which says those 25 sound bars, they only think they can sell them for 150, not 160. And worse, they're going to have to offer that boost in commission. They're going to offer $20. So how much are we going to realize from each item? Not 160, only 130. And if there's only 130, it's not 4,000, it's 3,250. So again, it's still doing computation, but this is one of the ways they could say, they're not just checking if you can do multiplication, they're checking, do you understand the concept? This one is kind of related to that question. And it says here, well, what's based on that? What's the story, right? Because it says, based on the information in the scenario, and let's assume they use US GAAP, the inventory of the older sound bars is, well, it's overstated, right? And it's overstated to the tune of $750. Where does that go? Is it a decrease to revenue? No, right? That's not what that is. It's not, they haven't sold it yet anyway, so that wouldn't make sense. It's not zero, so it's got to be something. And in this case, it's not good news, right? It's bad news. So it's going to be an increase to cost of goods sold as a result. Now this, don't look at more than it is. This is a multiple choice question. They can do that. So they can still use kind of multiple choice style to work your way through the question as you go through the different elements. So here they're basically saying, well, what's the difference between US GAAP and IFRS when it comes to specifically? So it says they made the decision to write down the inventory. They recognized, yep, it's not good. These old pieces of inventory, we're having trouble moving them. No one seems to want to buy them. It's all bad news. And then it says, oh, during the second quarter, well, guess what? Not that this is entirely good news. Apparently, there's some safety issue with the new model. Now, that's bad news for the new inventory, but if there's a silver lining, suddenly those older models became a whole lot more popular again. They said, yeah, in fact, demand has picked up. We think we can sell them for the original price. We don't even need to offer the additional commission. So their question is, you know, we took that loss in the first quarter. Can we have it back? US GAAP, as a general rule, isn't big on that sort of thing. Because they tend to be conservative, it tends to be more of a, once you've taken a loss, you don't get it back. Same with impairment. Once you've taken the loss, you can't get it back. But IFRS will let you reverse write-downs up to the amount of the original. So you can't write them up, but you can write them back. So in this case, we would say the answer is US GAAP would not be permissible. There would be no ability to reverse. You'd be stuck with the written down basis. But under IFRS, you are allowed a reversal under pretty much these exact circumstances. And then finally, one more kind of drag and drop. But this time, instead of giving you, do you want to go A or B, they've actually given us 4 options. So this is where, now, I'm a big believer on questions like this that are very clearly partial credit. You do the best you can, but I want you to have that mindset of, it's okay if I don't get all of them. It's great if I do, but if I get at least 4 out of 6, that's okay. If I can get 5 out of 6, that should be pretty good. I hope I can get all 6. So, for example, what would you suppose gives the best matching of actual cost and well, specific identification is the most precise. It's a pain in the rear. It's a lot of effort because typically you don't see most companies do it unless they have physically large or individually high value. So what's the classic example of specific identification inventory? A car dealership. Do they individually track each individual car? You bet, right? They have VIN numbers for pity's sake. So absolutely they do. Then you might say, well, weighted average. Weighted average is where it doesn't really matter whether it was the first one bought or the last one bought because they're all kind of in a pool together. So that's weighted average. That's where weighted average makes sense. Unfortunately, you'll notice what I've been avoiding. The ones that tend to or could be a little bit more confusing are FIFO and LIFO. Okay. The first one of them says, well, which one would ending inventory be what it would cost to replace them now? That means whatever you bought last is what's in inventory. Whatever you bought earliest is what you sold. That's FIFO, right? That basically says the last thing you bought is what's ending inventory, which means it should be the most recent cost. LIFO, on the other hand, flips that script. So in LIFO, if prices are going up, which generally is a better assumption than not, if prices are going up, LIFO means the last thing you bought, the most expensive thing you bought, is the first thing you sell. That will drive higher cost of goods sold. The one benefit of that is if you have higher cost of goods sold, you have lower income and lower taxable income. And if you have lower income, you're also going to have lower inventory. And that's how it works out. But again, it's about, and in this case, if you get one of the 6 wrong, make sure you were clear on the 5 you got right, but really your emphasis is, let me understand the one I missed, and hopefully I don't make that mistake again. What you'll notice is as I was working through that question up here at the top, there's a bar that fills in with progress. And in fact, when I come back out, it now shows my progress through the CBQs. Now you might say, well, why doesn't it show 100%? Remember, I put in $4,000 for that one part. So it's recognizing, yeah, there was something you didn't get right the first time, but it will. And if I come back and rework that question again on a later occasion and do it right, I can get that up to 100% if I'd like to.